Hey everyone, this is Michael, and this is the Stock Picks weekend video for March 5th, 2022. Before we start, I just want to say that the content information in this presentation is provided for educational, informational purposes only, and should no way be considered investment advice. So what we're going to do is just, as usual, we're going to go through the current market environment, our current positions, and then our ready and watch list review. So let's start with the daily update. On Friday, we're still in a red level stock environment risk level. It's just really the market tries to act bullish, and it just within a few days starts running into trouble again. So we've had for quite a long time, the best strategy is just to sell into short pops and do short-term swing trades, trying to hold for longer moves. For 99% of it, and 98% of it has just not worked. And we still have a recommended stock exposure of just 0 to 10%. We've been trying a few things here and there, but I think we've been stopped out 6 times in a row. So, and we have one position open. It's just very challenging to make any money. It just acts bullish on the surface, but that only serves to attract sellers. You just see it, many stocks are forming what they call reverse hammers in terms of candlesticks. It looks like a wick. So at some point the stock either opens higher or during the day it goes higher, and then by the close the sellers have pushed it all the way down. In some cases, the stock might have opened up 8% and it closed down 10%. So we have a huge range, sometimes 20% or more. And that's the environment. So the bigger players are just selling into rallies. So again, we've been just trying to do small pilot buys here and there. They haven't been working. When you get stopped out over and over, it's telling you that it's not a market to be really in. So we're down to one position. We'll probably just see what happens with that. It's an oil stock, so it's one of the few areas that's working pretty well. But we're always trying to judge. How are stocks acting? Are they lots of stocks breaking out and heading higher? Is this consistent? Or are they failing the breakouts? Or are stocks forming bases, but the bases are failing also, not just the breakout points? So we're always trying to see if these work. And when you start seeing them work a little bit, you increase your exposure. And then ideally, they continue to work, and then you're in the market back in. But we just get a little bit of like sun, and then the clouds come out, and then it starts to rain. And occasionally you get a big storm, and a hurricane comes through and knocks them all out. So that's where we are. Let's go ahead and move to the charts, and we'll take a look at what we have going on in our picks. Give me 1 second. Okay, so let's start with our one position, which is Centennial Resource Development. It's a oil and gas stock. It's still in the top 10. It's this oil and gas U.S. exploration and production is 6 out of 197 industry groups. It's acting pretty well, though it's been quite volatile. You can see this blue area here is where it's the buy zone, and at the bottom of this we call it the pivot, and it's just been breaking out. Sellers push it down, breaking out here. This is what I was talking about, one of these reverse hammers or a wick. At one point it came up here, it sold off. We've rallied back in there, sold off. Got support at this 21-day moving average, the green line, and we've come back up. We had another couple days of tried to break out new highs, it came back down, and we're going for the the 1, 2, 3, 4, 5th time. We'll see if it can do it. We do like relative strength line is heading higher. It's got a high RS rating. So it is looking good. It's just it's a tricky market. The market is just, when we have down days, it's pushing everything down. I think if it was a good market, this would have long gone. It would probably be a $10, $11, $12 stock. But that's what it is. So got pretty good earnings and sales. Over here you can see we're having a breakout year this year. In other words, the stock either had negative earnings or just under $1, and then suddenly we're over $1, and it looks like we're going to continue higher. So that's our one position. We're slightly up on it, and by 7 cents, and then we'll see what happens. So let's now move to our ready list. We have only one stock left on that, so it's also another sign that the market's no good. We get stocks that go on the watch list and ready list, especially the ready list, and then they fall off and go back on the watch list. There haven't been a lot that have just taken off and been removed from the ready list because they just went past. So here we go. This is Methanex. This has been on and off for a while. They're one of these chemical specialty companies, one of the other few areas that's done pretty well. And it's been, again, it's tried to break out, ran to resistance, broke below, but then closed pretty good on Friday. And overall, you can see here the volume on this right side of this cup with handle base and the breakout. You see a lot more of these blue spikes, showing that the institutions are, buying somewhat. Let's take a quick look at the weekly. And yeah, we got the RS blue dot, which we always like to see, which means that the relative strength is heading ahead of the stock price itself. It's a good sign. Yeah, there hasn't been all the selling has been, especially here when it came down this side of the base, it's all been below average. This red line is the 50 period moving average. So it's looking pretty good. It's got good ratings overall, 95 out of 99, good earnings and sales. So again, it's probably just been being held down by the market, but we are in the buy zone just because we're not doing that well. We're not going to buy it, but it's something that anyone could buy. It's in range. We just don't want more exposure. I think at this point one stock is enough. But if someone's not invested at all, this looks like a good candidate to use. So that's also something that we don't buy everything. We get that question sometimes. There might be 6, 7, 8 stocks on the buy list. We can't buy them all, just because we don't have either the capital available or it's just too much exposure given what's going on in the market. So, but for someone that has no exposure, that's it's pretty good. It's the best candidate, at least at this point. So let's move on to the watch list, and we have, looks like 8 names. This is one that we bought and got stopped out. It broke out and then just ran into sellers and took us out. So that's back on our watch list. But good earnings and sales. That's this market. Here you can see over on here in the chart, we're getting just huge annual earnings increases from what it traditionally has done. So they're a shipper out of Greece, and they do, I think, dry ship. And this has just been the place to be, given all the supply chain issues, and so they're making tons of money. Interesting, PE is only 2. We don't really look at PEs, but I mean, a stock to be doing this well, 99 out of 100 out of 99 the composite rating, and have a PE of 2 is pretty remarkable. And it's still a very small cap stock, under a billion. So we'll continue to watch that. Maybe if it gets back up, we'll give it another shot if the market improves. This one's Molina Healthcare, ticker MOH. You can just see it right here. It's very volatile. It's been trying to break out. It looks like we even have a new buy zone here. I think it was over here before, so it kind of changes. But just too much volatility. We don't want to buy into this volatility. Just and look at the giant spikes down here on the negative side, on the selling volume. So that's not something we want to see. We want it to quiet down. We don't want it to be getting more volatile. So it's on the watch list. Not really super buyable, but we'll leave it there. Maybe it'll improve, because that's what happens sometimes. In fact, here's one that's actually looks a little better. Another cup with handle is forming, but see how we're much tighter here in this part, under the buy zone, and we have the blue dot, another good sign. The only thing we don't like is that the volume. We want the volume to see like this, where it quiets down to almost nothing. And it means that the selling is just dried up. There's no more sellers at this level anymore. And it doesn't always 100% work like that, but for the most part, you see that, and then the market, as soon as there's some buying, their sellers are not there to kick it down. So this looks pretty good. We do have a buy right here at where are we? No, this actually moved. I need to update our. No, sorry, it is this 242.67 to 254.80. we're still a little bit away from that, but it looks promising and very good fundamentals. And the sales and earnings have been improving. It looks like it's kind of a turnaround. And then going back here, you can see this company basically on this annual earnings was, $4, $5, $6, got a little higher, and then suddenly we're jumping up to $14 and $16. So they're doing quite well, making a lot of money, and they're sort of a diversified operations company. So it seems to be working in this environment. We'll continue on. A few more to do. Next one is Walker and Dunlop, and this ticker is WD. And this one is an interesting one where the stock's kind of flatlining, which we like to see, but if it flatlines for too long, then that's not a good sign, and the relative strength is not great. And just looking at this too, you can see a lot more spikes on the downside than the upside. Except for after earnings. We had earnings which were negative, which wasn't great. But the market liked it, must have had some good guidance, but we've just been kind of floating right under this 50-day. So a little caution there. We do have a buy right above here. And we'll see if that's, we might run into resistance at the 50-day, which has kind of been what it's been doing. But it looks pretty good. I mean, it's holding up pretty well in this kind of market. And again, it looks like the earnings and sales are starting to increase. The next one is Boyd Gaming. This is one I actually bought for my personal account, but got stopped out as usual in this market. Again, just look at the volume on the downside. We're getting the opposite. Instead of quieting down, we're getting more volatility over here, even though we're in and out of the buy zone. So it's on our watch list, but it's not great. This is the problem in these markets. You don't end up with a lot of really like crisp setups. You're almost like looking for the best of the worst. So that's what we're given. It will change at some point, but that's where we are. So we have three more. This one's American Financial Group, another insurance company. Looks similar to Walker and Dunlop. Same, it's kind of just basing out here. And we have a buy at right above this, 141.23. We're at 141.25. And let's look at the weekly chart on this one. Yeah, relative strength, we have a blue dot, so it is outperforming, which is a good sign. And the relative strength is 87. We prefer it in the 90s, but that's what we got. But we're not getting a lot of selling. A little bit above average, but it doesn't look bad overall. So we're going to continue to watch that one. We have a new one we just added, another insurance company, Selective Insurance. Little better chart here. Even though it's been, here, look at this giant reverse hammer. Went high during the day and closed all the way down to lows. That's a sell signal. So if you were in this stock and it did that, you'd probably just be time to get out. It's a pretty wild day it had there. And it closed down to 6% of the range. So that wasn't a good sign. But that looks like it was a one-time thing. And then we've just been kind of floating around that price. And then we suddenly burst above in some nice volume. And we're now kind of, we can see here, if I just draw the line here, we're getting resistance right at this 84.25 range. It looks like going back over here. We got a little bit above that one point, but this is where the sellers are lurking, right above 84.50 or so. So we do have a buy 84.40. And the relative strength is actually looks nice here on the daily chart here again, but we don't like the high volume, even though the price level has been contained. Another little warning sign. And even over here, you look over, there's a lot more spikes of pink here than blue. So we'll see. That's just, and we have one final one, Textron. And they make aircraft, so they're in the defense area, and they make other armored vehicles and stuff, which has been, some of these, like Raytheon and General Dynamics, they've really just taken off. This one really hasn't done as well. That's something we like to look at too. Let's look at General Dynamics. That one really just took off, and so that's one that we wasn't really, well, I think we had on our list at one point, but it just wasn't acting all that great. But unfortunately, it took off after that. It didn't really give us a great buy spot, so that one we missed out on. But then we get one somewhat in the same area, and it's not performing as well. So this is a little bit of a laggard, but it's forming a pretty constructive bottom of this pattern. So we do have a buy right at about 74 if it breaks above this. But another thing too, a lot of these ones that are not breaking out into new highs, they're breaking out of lower chart patterns. They're a little higher risk, and they tend to fail a little more often. So just know that going in. But that's really it. In terms of the long-term outperformer portfolios, there's just nothing, because most of the stocks that we've had in the past are now former leaders. You know, we had like Viva Systems and Atlassian, the Trade Desk, Adobe, just a lot of these, and they're just run into trouble, and some of them have really just crashed. So, in fact, we can look at this Viva system. This is one that was a fantastic winner for many, many years, and here we are. We're closing in on down 50%. Let's look at a weekly. Yeah, so this one's not as bad as some of them, but if I go back to a long-term chart, yeah, so we're getting the biggest decline we've had since this stock came out, and it's been a fantastic performer. That's a good 1,000%, but we're starting to knock off a lot of the move. Now these are exponential charts, so it doesn't move like this is actually a pretty big move compared to what it is. So you would have already lost 50% of your gain just about even if you had bought it at the very bottom. So, and not a great sign. And this is just probably one of the better ones. I think here's another one, 5N, yeah, 5.9. This one's, yeah, it's starting to give back really big chunks of its move. Yeah, in fact, you look at a daily chart, they're just rolling over, and that's a pretty big decline. So we're just not getting this. These are the stocks that used to be on the list, and they're just not. Or even ones like PayPal, which is really not performing well at all. I mean, that's just making new lows after new lows. I'm not quite sure why, but yeah, you can look. This is giving back the whole rally from the coronavirus crash. And if we look at a monthly, yeah, this is just for whatever reason that one's gone. We were at 300 a share, and we're now at 100. So we've given back. That's a 66% decline. So not quite sure what's going on there, but these were long-term performers, and most of them are broken. So we're really not finding anything. It's not the environment for that. So, but it'll be back. So that's about it for this week. We'll be back next weekend, and hopefully with some stronger picks to choose from, or at least a better market environment. But for right now, we're mostly in cash. That's really the best place to be. The overall market trend's in a correction. So it's all in all, everything's telling us that the market is not the place to be invested in right now. And we heed that, and we come back when it's a better environment. But in the meantime, we always keep watching, because the market can change really, really quickly. And we always want to be ready. This is a time to really be going through, getting the watch list ready, finding the best stocks, because some of them are going to turn out to be massive winners in the next big cycle. And there'll probably be names that you've never heard of, I've never heard of, and they won't be the previous winners. That's just sometimes how it works when you get coming out of a bigger market correction and starting a new secular bull market. So, okay, well, that's it for this week, and we'll be back next week. All right, thanks.